Gold closed the week in red, showing lower highs and higher lows, indicating consolidation at current levels, but also indicated that any of these levels, if breached, certainly it will show you another round of good move. So, what to expect next week? We will see with the help of charts and indicators. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which keeps you updated with the daily and weekly analysis for major global markets and commodities. In fact, for gold, I share twice a day update in this analysis. First, we look into charts followed with indicators. As indicators such as see the moving averages are divergent, and see the MACD is also showing a crossover for a sell. So we will see with the help of indicators that what to expect, and towards the end I will give you the trading strategy and analysis for next week and the levels also. So do watch till the end. Let's start. First, let's start with the daily charts. Now, look at the daily charts, and we have seen this on our previous analysis also. Since last 4 to 5 months, gold is trading in this channel. This is a bullish channel, this is an upward trending channel. And see, this time after a long bullish move, it is just consolidating, giving you higher lows, lower highs. This is a phase of consolidation, and this also indicates that the breakdown any point of time, if you see trading below 1940 levels, certainly it will bring more bearishness, which might take it till towards 1900 and below levels. Also on the daily chart, there is a slight gap left at 1870. Now see, the bottom of this channel is also precisely at around same levels, that is 1870. So possibly if it breaks below 1940, there will be more bearishness which might prevail, taking it till towards 1920, 1900 and 1870 levels, which are going to be the next support. So this is something you should watch out for. The next important thing is, see, this time it has failed to, it is still shy of the higher highs there. It is still shying away from this and trying to trade bearish. It appears that the bullishness has diminished, but at the same time, remember, if it breaks above 2000, then we are looking for another round of bullishness, which is going to take it till towards 2050 and 2075 levels, which is also the near term highs which we had seen in last couple of years. Now this is on the daily charts. Look at the weekly. On the weekly charts, at this point at the triple bottom at 1620, I told you that it is bound for a reversal, and at this point we had very clearly mentioned that it is going to fly high 1950 and above levels. Now see, this is breach past 2000 also in last couple of weeks. And now if you look at, see what it is happening, same what we had seen on the daily charts is getting reflected here. Consolidation, phase of consolidation, this is also a bullish flag. A breakout is awaited, but remember, now what could happen, see, increasing body size is something which you should watch out for. Increasing body size indicates that there is bearishness and it is trying to remain bearish. It also indicates that it opens below 19, that is previous close at 1970, and it stays below. Specifically, just wait and watch out for 1950 to be 50 and 40 to be breached. Below that, it is going to give you very good drop, which might in fact take it till towards 1900 and below levels. So there is a possibility of a good drop. It is cooking up, and hence if it tries to stay below 1950 and 40 levels, stay short in gold, and you are going to get very good profits there. Now still, what it is to be considered here is, see, it is trading in this bullish channel as we have seen on the daily charts. Now here also 1870 levels are a very good support. So there is a possibility, see, rise, retracement, and this was a sharp retracement here, then rise, and now again trying to retrace. Possibility exists that it can try to show you slight bearishness for 1 week or so, but this is only applicable if it stays below 1950-1940 zone, then and then only. Remember, you have to stick to the levels, not to the bias. If it sticks to 1950 and 40 levels and bounces back from here, you have to stay away from the short entry. Now also remember one point, that yes, the previous highs, that is last week's highs, if once broken, that is 1985 1988 levels, we can see it flying high for 2000, and this time it is going to fly high 2040 2050 levels. You cannot ignore this possibility. So this is one part. Now let's have a look at the monthly charts. Now see, on the monthly charts, we had seen previous 2 months higher highs, higher lows. As increasing bullishness is what we have seen in this candle. It has reversed completely. Also, You can see the support there at 1840 levels, 1830 levels. It is formed almost bottom and try to reverse here. Now remember, this is first big bullish candle after this greener candle. Hence, what I am expecting is there could be a slight pullback. There could be a slight pullback till towards here, or maybe a slightly lower. And then there could be a stronger reversal towards the end of the month. So this is a new monthly candle which is going to start the coming week, which means the first week might trade bearish and then the retracement journey starts from the next week onwards. So because see, the bullishness is still very much there, it can achieve the bottom of the channel in next first week, or maybe you can say second midweek, and from there a reversal can be expected. Reversal can happen. Why? I will show you with the help of indicators. Now see, we have seen 7 to 8 red months, and this is the third, fourth green candle in succession. Also, this candle has a good wick on the upside, which leaves a space for it to continue with the rally. Now, also, if you look at the lower high, this also keeps a room for it to break past on the upside. Remember, one point I would like to show you, which I had shown you earlier. See this, this is a good pull. See this is a good flag. Now this is trying to break out, and this breakout will certainly bring more bullishness in the coming months for gold if it stays above the previous highs of the near term. Remember, it is going to bring more bullishness and it is going to fly high. So I will wait for this to break out. Possibly April and May are going to be the months when it will try to showcase the bullish momentum here. Now we have seen the charts. Let's have a look with the help of indicators. What are the indicators are suggesting here? Now on the indicators part, the 20, 50 and 100 period moving average, this is exponential and simple, this is exponential, and this is exponential and simple, both coming together at 1940. Now this also makes these three levels as a very important support level, 1940, 1900 and 1870 levels, which is also a gap there. These three levels are going to play a very important role for gold in the coming days, and hence you should be watchful of it. Remember, it is trading so far with divergence. You can see the divergence getting stabilized here, and now it is trying to keep with the same distance, which is also indicating here there could be a slight convergence for next few days, and from there a possible divergence can happen. What I mean is this, see, it is stabilize here, then this drop, convergence, and again diverging. This is the second peak here, now slight convergence, and again possibly. So this is something I will be looking forward to if it continues to trade bearish next week. But look at stochastic traded overbought and then this decline, and now it is trading at a comfortable zone. But look at MACD. See, MACD has crossed over. This is trading with divergence, and see, this crossover is coming at a certainly slightly higher levels, which probably might bring little more bearishness if it continues to diverge from here, and from here possibly higher lows for next few days may try to trade bearish. That is what it is getting concluded from the charts and this daily indicator. See, the stochastic was overbought and looking down here, and if you look at the weekly chart, now most importantly on the weekly chart, see here the gold on the weekly charts have crossed over. This is trading with divergence here. The 20 period moving average is staying at around 1870, and on the weekly chart this is a very important factor. 20 weeks is almost 5 months, so 5 months average is now staying at around 1870, which is again a very good support there. Now also, if you look at the weekly stochastic, this is overbought, and we had seen in recent past, then whenever it tries to stay overbought, it can stretch it a bit, but however it has to cool down a bit. So that is where this couple of weeks are going to remain important for gold. If you look at the MACD here, this is diverging again, this is bullish, but see, this divergence is also coming at a slightly higher levels in the recent past, and hence a convergence from here can be expected. The RSI is also looking down, achieving double top there, and hence see, there is still an indication of slight bearishness. Now look at the monthly chart. On the monthly chart, the moving averages are trading with divergence. Now the 20 months average, that is almost close to 2 years average, is sitting at around 1800. Now also, if you look at the move last one, see the Bollinger Bands here. The Bollinger Bands are fairly trading with flatness there. They have not yet diverged. I'll wait for the next monthly candle here. See, it has to start and it has to diverge more. So yes, for next first week until midweek second week of April, we can find little bearishness, and from there a recovery is very much possible. And this time this breakout might try to stretch a little such that the Bollinger Bands can get expanded. It might try to stretch out of this. Also look at the stochastic on the monthly chart. This is trading overbought, and these levels are seen after couple of years. Yes, and this may continue also for maybe this month or next month. It can try to stretch the bullishness for a little far. Now look at MACD. Why there could be bullishness? If you look at MACD, now look at MACD on the monthly charts, has just crossed over, started to diverge. Last candle was a greener candle, and this candle there could be still further divergence. We can see second candle, which means it can try to bring little more bullishness in the coming months. That is what I can expect. See, it tried to cross over here, failed to do so. It stayed bearish. Now this time it is crossed over. It can try to remain bullish, and that also indicates that even if it tries to drop in the first few days of April, we can see a bounce back or a recovery later, and achieving higher highs are very much possible. That could be accelerated bullishness which we might see. That is my expectation. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you such that you can benefit. And before I give you the levels, yes, if you want to learn this art of trading profitably, you should join my mentorship batch. The 21st batch starts on 10th of April. Reserve your seats now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, the free Telegram channel link is mentioned. Join there and keep yourself updated with the daily market updates. Also, you can be part of my signals channel where trading as per the signals you can benefit. Reach out to me for more details, again on the same contact details. Do read the channel and video description. There you will find the contact details. Now next week, first of all, see, you can buy only if you see it trading above 1980. Rather, I will say, see, 1980 is a good resistance, but yes, beyond that you can still find 1985 levels. If these two are taken, then and then only. Rather, I will say there is a nearer resistance. Last week's high at 1987-88. So till here you have to be cautious, because once the last week's high is broken, we can see it flying further high. We can see it hitting 2000 levels this time, and then beyond this, if it stays 2010, this is the previous high. Beyond that, directly it is going to land at 2040, 2050 levels. The next bullishness is going to be far away, and it is going to stretch this higher. So you have to trade with caution. Remember, if it stays above 1980, 85 and then 2000, this zone, if it breaks, it is going to bring more stronger bullish momentum. You have to be cautious here. It can give you a breakout. However, my expectation is for it to consolidate a bit before trying to reverse, and hence even if you see it trading below 1960, you can sell here and expect 1950 to be breached. See, 1950, 1940. Now these levels are going to play very important role for gold on the downside. If it stays below 1940, stay short 1920, 1900, and then 1870 levels may get reached. Remember, this is going to be the next stronger support, and only if it breaks below this, then you can expect 1840 levels to come into play. I don't see it breaking till there, but these are markets. Anything and everything is possible. You have to trade with a strict stop loss and a trailing stop loss. So this is all from my side for the week. Do watch the daily twice a day updates for gold, one with the Asia session, next with the US session. Definitely it will help you in your day trading decisions. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.